I would tell people to trade a good amount of their silver to gold, right, wrong, or indifferent. I'm not saying get rid of all of your silver. I'm saying that it's an opportunity that doesn't happen very often to see this ratio in a historical context. It is rarefied air. It's happened just a very, very small percentage of the time over the last 5,000 years. I think it's a real opportunity to play the gold-silver ratio. But with everything being said, to me, it is the most undervalued asset on the planet, and the play of a generation, the trade of a decade.
AndySchectman, the CEO of Miles Franklin, provides a valuable perspective on the choice between two precious metals, gold and silver. While a blended approach may hold merit, he outlines the key considerations for individuals when deciding between the two. He underscores that the answer can vary depending on an individual's unique circumstances. The World Gold Council's recent report revealed a substantial increase in gold acquisitions by central banks, lending crucial support to gold prices amid global monetary tightening. Countries expanded bullion reserves by 337 tons in the 3 months through September, the World Gold Council said in a report Tuesday. Schectman points to the significant acquisition by central banks and the reclassification of gold as a high-liquidity asset, reinforcing his preference for gold. Conversely, silver's appeal lies in its multifaceted demand, stemming from both industrial and investment sectors. Despite the Silver Institute's projection of a slight decline in global silver demand in 2023 from the previous record-high year, Schectman underlines silver's undervaluation. He emphasizes its burgeoning demand in technology, military applications, and aerospace, attributing the metal's worth beyond its current price. The silver market has witnessed a historic deficit, reaching 237.7 million ounces in 2022, while the Silver Institute estimates a shortfall of 142.1 million ounces for 2023. Schectman perceives this state of scarcity as a remarkable investment prospect, advocating for the ownership of both gold and silver while underscoring the exceptional undervaluation of silver as an especially compelling investment opportunity. Before diving into AndySchectman's interview, subscribe to our channel and give this video a big thumbs up.
I say if I had one trade and only one to make, just one, I'd buy gold because of the central bank's massive acquisition and its reclassification to a high liquid asset, in essence, tier one. But I also say that I believe silver is the trade of a generation, that silver is the most undervalued asset on the planet. I don't think you can find a better investment, period, than silver. And when I talk about only if I had one trade to make, it would be gold, I would not be upset if it were silver. I just think there is a lot to be said for the fact that the central banks are buying more than at any time in history and repatriating it and reclassifying it and using it, I believe, in an ultimate drive to find some sort of honesty and transparency and stability to a new system. With that being said, there has never been, in my opinion, in my career anyway, a better time to own silver. I mean, the last time I said something like this, I said, I'll give anyone a free silver eagle if they can show me, and someone showed me, and it was on your show, that the point is still the same. I mean, what asset can you find that is half of its 1980 high? Now, I read something interesting lately, and it's, I guess you could say, somewhat conspiratorial, I don't know, but basically saying that the military-industrial complex, because of the copious amounts of silver used in advanced technology, military equipment, and aerospace stuff, that they have been part and parcel to the suppression of the silver price. They've been trying damn hard to keep it down because of the amount of silver that you need. They wanted it affordable. They didn't want it to run away. Whatever the reason is, I can tell you that I have never seen really an investment in terms of price, in terms of historical price, in terms of its relationship geologically, or just simply its outright price relationship to gold. I have never seen something that is depleting in nature and increasing in supply, yet is decreasing in price. I have never seen something that is priced at a nearly 80-to-1 ratio, yet coming out of the ground at 7-to-1. And any way you want to slice these metrics, whatever investment you're talking about, you have an asset that is decreasing in nature, increasing in demand, is priced well below its 1980, half of its 1980 peak. There are very few things I've ever seen that offer that type of potential. Now, if we saw the ratio go from where it is now to under 40-1, I would tell people to trade a good amount of their silver to gold. Right, wrong, or indifferent. I'm not saying get rid of all of your silver. I'm saying that it's an opportunity that doesn't happen very often to see this ratio in a historical context. It is rarefied air. It's happened just a very, very small percentage of the time over the last 5,000 years. So, look, the bottom line is I like them both, and you should own them both. And I think it's a real opportunity to play the gold silver ratio. But with everything being said, to me, it is the most undervalued asset on the planet, and the play of a generation, the trade of a decade.
The World Economic Forum's community of chief economists foresees a prevailing sentiment of looming global recession in 2023, citing ongoing geopolitical tensions that continue to shape the world's economic landscape. In response, they anticipate further monetary tightening in both the United States and Europe. Amidst these concerns, Andy expresses expectations that the demand for gold and silver might surge in the event of a financial crisis, bail-ins, or even amidst global chaos, conflicts, and economic uncertainties. The upcoming Federal Reserve meeting is expected to result in the central bank maintaining its current stance without significant changes, aligning with market expectations. Bank of America's credit strategists note the likelihood of the Fed holding rates steady, attributing the cautious approach to the rapid rise in long-term Treasury rates. Chair Powell is anticipated to emphasize the Fed's careful and methodical approach during the press conference. Andy underscores the concerns surrounding the Federal Reserve's role, the dynamics of the market, and the potential challenges ahead. Let's get back to the interview.
It's as if the retail gold market, in terms of prices and availability, sees nothing of trouble on the horizon. It's as if the retail gold market, in terms of prices and availability, is acting like this is 2019, even before the thought of a pandemic hit anyone's mind. So no, I mean, the premiums are great. The availability is great, which makes it even more hard for people, I think, to rationalize what guys like Ted Butler are saying. This massive shortage of industrial sized gold and silver bars. It has not worked its way down into the retail market yet. There will be an event, and I really do believe it will be a bank event and a bail-in, which is law. It's not something hyperbole. It's not makeup. It is law. The fact that Silicon and Signature were bailed out was in violation of the Dodd-Frank Act. And the next time it happens, and the realization, people realize, oh my gosh, they've lost everything. In a bail-in, I think that all goes upside down very quickly, even in the midst of two wars and all the chaos we see around us. Gold and silver should be flying off the shelves. Business is strong. I guess it's a subsidy, and people who are looking to add to their holdings should be glad, because it makes no sense to me. I look at a big picture. The big picture to me is that I think that we are heading down a pathway to some sort of a default. It won't be an explicit default. It'll just be an inflationary default. I think we're heading into a period of time, or to a place where foreigners aren't going to buy our bonds. They don't want to. They're going to stay away from them and choose other things like gold and silver. That means the Fed will be the issuer, or the purchaser rather, of last resort. I think we'll see higher inflation. I think that what the Fed is, the jawboning that they do is nothing substantive. Yeah, they'll probably pause right now. They're not going to pivot. They're probably not going to raise. Whatever they do, it's meaningless as far as I'm concerned. And I think that you're going to see the market do the dirty work for the Fed more than anything. And whether that be foreigners dumping treasury, this conflict in the Middle East spiraling into something much bigger, where the OPEC nations issue some sort of oil embargo, which turns into some sort of an event where maybe even OPEC flips that switch and moves away from the dollar, because how we're so not aligned anymore, from going green to whom we're defending and representing and backing, and these alliances that are being made and chosen. I think you're going to see a very difficult time in the treasury market. I really do. I think we haven't even begun to see the problems yet. So whatever the Fed is saying, it's just noise to me. One of the things I find most annoying is how the markets are so reactionary after Powell speaks. A $400,000 mortgage 2 years ago at 2.75% was $1,600 a month. That same $400,000 mortgage now at over 8% is $3,000 a month. That's an 85 or 88% increase in 2 years, and we're not slowing down this trajectory. And I don't think what Powell will say will mean anything. They haven't been honest about anything they've told us to date. Why believe it now? Don't listen to the noise. Look at the big picture. And the big picture to me is something that is much bigger than the Fed. I think the markets are much bigger than the Fed. And I think they're starting to realize that, as we are seeing a lot of countries around the world just treasuries. And this is a problem where we continue to go deeper and deeper and deeper into debt. At some point, how high does the yield have to really go to attract more buyers of our debt? I don't know, but a lot higher than we'll find out in anything Fed Chairman Powell has to say this week.
Gold prices have been unable to hold the line at $2,000 an ounce, as focus once again returns to the Federal Reserve's monetary policy. How might the Fed's decisions shape the future trajectory of precious metals and broader financial markets? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.